So Michel, thank you very much for this very nice keynote. And actually,
Pleasure.
it's a good introduction for this panel. So hello everyone. I hope you are fine. I'm Raph Bloch, one of the co-founders of the European crypto media, The Big Whale. And actually, I'm very glad to be with you on stage to talk about crypto and payments. To be honest, we've been exploring this subject for now, many years, but I think that it's still a really nice one because it allows us to come back to the ethos of crypto. Because from the beginning, as you know, crypto have always been related to payments. So to talk about this and to know where we are and how to integrate crypto in the payment industry, I'm very glad to host Michel Khazzaka. You don't need to introduce yourself once again. Also, Karima Lachgar from Olkypay Wallet. Karima, if you could just, tell a few words about you.
Yeah, I'm the CEO of Olkypay Wallet and as well the head of BD of Olkypay. Olkypay is a payment institution involved in a payment space since 12 years now, and the group moved to the crypto space since 2018. So formerly I was a lawyer assisting DeFi protocols, VAS, etc.
Okay, cool. And we have also Christian Rowe from Mastercard. If you could just introduce yourself briefly.
Hi everyone. I apologize because I'm afraid we have to do this in English because of me. Everybody else speaks French. So really appreciate your bearing with me. My name is Christian. I'm heading Mastercard's crypto go-to-market efforts in Europe. Have been with the company for quite a while, and really appreciated Michel's introduction. While I would back to different details, I think it was very instructive and very clear.
Okay, perfect. So actually, I would like to start with you, Christian. So we want to talk about crypto and payments, but before, to going forward on this, I would like to know where we are actually about integration of crypto in the payment industry. You represent Mastercard. We know that you have a lot of projects, but can you maybe tell us more about how you see crypto and how you want to integrate it in Mastercard regarding the fact that you are with Visa, the biggest player in the field?
Yeah, very happy to do so. And one important thing is I speak very much from a European angle because I see El Salvador and different parts of the world, where people don't have access to the financial system and FX as we do here. And I just want to keep it simple. So I think from a European perspective, we don't see a market failure in payments. And I think that was also what transpired from Michel. Never in history had Europeans more choice when it comes to payment, especially in the e-com space, right? You have carte bancaire, you have Visa, Mastercard, PayPal, Klarna, and a whole lot of others. And at Mastercard, we're all about offering choice, how people want to pay and want to get paid. And obviously, since a couple of years, what we now call crypto or digital assets have been increasing in relevance in the wider public. And then, of course, when you look at the the value promise of the original Bitcoin white paper that says, there should be a way for everyone to exchange digital cash without central intermediaries. If you're one of these intermediaries, you better start thinking how you embrace the technology to improve your proposition. And I think that's what we are doing. And as per your point, we are making inroads there. And I can speak to some examples how we make crypto basically fit for purpose, to use our language, for payments, and that quite likely will differ from other people's perception how it can be made fit for purpose. Because, and I don't want to oversimplify, what we are very concerned about is all things around stability of value, consumer protection, and regulatory oversight. So KYC, AML, all of these things, because we are very much in TradFi, if you want to use that language. We process 9 trillion in transaction value. We have 3 billion cards out there. So when we engage in crypto, we want to make sure that it fits in the current system without, let's say, some of the drama that,
and no, it's just, correct me if I'm wrong, but at Mastercard, you are more crypto than Bitcoin, right? You are only working on crypto projects, but you are not working on integrating Bitcoin.
So we don't want to see Bitcoin in our native network at this point. So we look at stable coins or CBDCs in our network, and Michel mentioned the Bahamas. So we were the partner to the central bank of the Royal Bank of the Bahamas in their CBDC effort, and we do use stable coins for settlement. But if you want to pay with Bitcoin and Mastercard, what essentially happens if you have a card that is issued to you not by a bank like Société Générale or BNP Paribas, but a crypto exchange, you tap the card at Carrefour, there comes an authorization request, and then in real time on the platform of the exchange, Bitcoin or Ethereum or whatever you want is converted to fiat, and the merchant gets fiat. So in our part of the world, euro.
Yep, and Christian and also Karima, so you're working both on so crypto and fiat.
Yeah.
What's the main advantage, according to you, to use crypto? Maybe Karima, you want to start?
Yeah, it's maybe if I come back to the vision of the integration of crypto in the payment industry, I think it's interesting what you said as a card scheme representative, because our vision maybe is more close than Société Générale wants. I mean, the way we see the rationale behind the crypto is not only as a player accepting crypto flows or even offering velocity between fiat payment accounts and wallets, but as a crypto issuer itself. And we already have a track record on it. I mean, 3 years ago, we issued a KeyCoin, which is a mean of exchange into a permission DLT focused on high-risk industries. Last April, we have tokenized our payment instrument, which is regulated under PSD2 for offering swap between, let's say, real-world asset tokens and our payment instruments. And last but not least, we assist the Web3 since 2018. So as a result, we gain a real sectorial expertise, making us able to pass the inspection of major CAT schemes in the context of its own risk program. That being said, we think that there is two categories of main incentives pushing the payment industry to integrate the cryptos. The first category is around, let's say, the fact that there is strong similarities, natural synergies between the two industries. Let me give you an example. Usually, crypto users argue that the main benefit of using cryptocurrencies is the speed transaction execution due to DLT futures. Actually, Olkypay is able to process instant payments since 2021, and therefore to manage ex-ante and ex-post control on AML, fraud, like that, while CASP haven't yet integrated this control because the regulation is new, TFR is new for them, the 6 AML directive is new. Another example of our level of maturity in integrating crypto is the fact that we are able to operate IT architecture and transaction messaging, which are both resilient and compliant with market standards. We are already compliant with key provision of DORA, which will enter into force next January, while again, CAS have to assess the impact of DORA on their businesses and make the gap analysis and try to comply with. The other category is, of course, the regulation. I mean, central banks have fight against the idea that Bitcoin and stablecoins are a new form of money, but at the end of the day, MiCA recognizes stablecoin as electronic money, and electronic money tokens are included in the definition of funds within PSD3. So it gives us big advantages in dealing with cryptocurrencies because, of course, we are already compliant with the EU regulation, while native players have to, again, make the gap analysis and try to comply.
Okay, so it's not ultimately a matter of speed? Would it be a matter of cost, something like this? And after, I would like to hear the Bitcoin guy on stage.
I think it's interesting, and again, trying to be objective. If you look at speed, I think how long it takes to forge a Bitcoin block. I think every 10 minutes and whatnot. If you look at the transaction speed of a card transaction, I mean, it is instant, right? I'm not saying the money is transferred instant, but at the point when you tap the card at Carrefour, there's a payment guarantee, and Carrefour will get the money. If you look
Christian, you know better. It's not instant.
No, but and that's why I said it's hard to be objective. But I think speed and if you look at cost, I think cost is always an interesting element. But a debit card in Europe, without going into detail, and I hope Michel would agree that a card transaction, a debit card transaction, more often than not, is cheaper than a cash transaction. Because a lot of people think cash is the zero line that is free of charge, which is not, right? If you bring cash to your bank, if you bring coins to your bank, they will take you like 5% or something, because it is physically, things that you need to handle. So I think one needs to be very clear, and what I just say will look totally different if you look at cross-border transactions. Let's say Michel is in South America, I'm in Asia, and then the money goes from South America to New York, to Frankfurt, to Singapore, to wherever it is. Then of course this looks totally different. But while I can subscribe to speed and cost, I think you also have to be fair that the current system, it is pretty efficient. It's pretty high performant.
It is optimized. It took this industry, the payment industry is a very, very optimized industry. It had like 50 years of optimization. So it's very specialized. This means Mastercard, that Christian represents, does one thing on the value chain of the payment: authorization. It can help banks, issuers, acquirers, but its role during a payment is to authorize the payment. The authorization is very fast, and it was an incredible innovation what was made. We are not bashing card payments, of course not. That's how I live. I work in card industries. Unfortunately, it's not an instant payment. It's not a final payment. It's only an instant authorization. So did you try to pay in Bitcoin here? Did anybody try to pay and buy something? One person, 2, 3, 4, 5, 6? Yeah, so did you pay with Bitcoin Lightning? Yes? Bitcoin Lightning. So when you buy something here with Bitcoin Lightning, do you know that it takes about 500 milliseconds to finish? And the finality of the payment on the Lightning layer is instant, is 500 milliseconds. Now the time that it goes to the Bitcoin layer 1, this is something else, but the finality is done instantly, not the authorization. And it's a liberating experience, clearly. When I was in El Salvador, I spent all 10 days paying only with Bitcoin Lightning wallets. It was, I took my Visa card, the Mastercard, and left them at the hotel. The cash, I left it in the hotel. Of course, cash can have cost. Nothing is free. But cash, you possess it. Cash is private. Now, immediately the question arises, why do you want to do a private payment? Because it concerns nobody what I'm buying or what I'm sending. Now, of course, what I would add that Mastercard had helped the industry and Visa to do the on-off ramps. Thanks to Visa and thanks to Mastercard, you can now have a card and go and buy stuff using your crypto wallets, your crypto assets, and pay with EMV, pay with a card. So the merchant will receive euros and dollars. And we need to acknowledge that this role, card schemes have played well. Card schemes are more vigilant than banks. And they're more intelligent, actually, and they're in a better position than banks. In 2012, when the smartphone was invented and Bitcoin was invented at the same year, 2008, the president of Visa Europe said, the battle of the future of payments started. And the convergence between the mobile, digitalization, data, value of data, and the future of payments, our role as Visa and Mastercard is to take a place in this future. So they knew that the card, the plastic, it will not die immediately, but it's on a dying ramp. So that's why Visa and Mastercard were from the beginning here, and now thanks to them, 135 million merchants around the world can accept crypto payments.
And
we are part of them. So yeah.
Luckily, there are banks and neobanks helping.
Yeah, but I'd like to add the fact that for us, what we see from the market, there is no, let's say, technological or even market barriers preventing the PSPs, the payment industry, to adopt more quickly cryptocurrencies. The key point is the capacity of the traditional finance to assess the risks. Because it's all about risks, managing risks, fraud risk, AML risk. It has nothing to do with the IT for our viewpoint. I mean, it's easy to manage
and maybe also a little bit question of market shares, maybe with new players.
I will come to this question because it's a very interesting one, and it explains how the PSP market functions. But coming back to the costs and what are the main barriers for the mass adoption of crypto by the payment industry, we think that, yeah, the problem is the adoption by traditional banks, which we need to have in mind. The banks have decided to de-risk massively themselves from a dozen of high-risk sectors, including crypto, at a point that it became a real concern for ESMA, EBA, I mean, for all banking operators. You have a dozen of business sectors that are not covered by the banks, actually. So,
I just wanted to comment on one point that Michel was making, and we are very open to technology, and I agree with you, Michel, what you were saying. If we don't innovate, we're out of the equation, right? I have a 14-year-old daughter. She never set foot in a bank, ever. But
And she will never.
And very likely she will never, but she touches her iPhone, I don't know how often, right? And if we're not on this device, then she will go somewhere else. And now that regulation allows for, you know, for stable coins and all of these things, we need to evolve. And that's why we are saying previously we called it rail agnostic. So whether it's cards or ACH or IBANs or blockchain, we're using all the technology that is fit for purpose. That was the one point that I wanted to make. And another point is that what we see, if you do these things that we do at that scale, moving money from A to B, I don't want to say is trivial, but it's only part of the job. What do I mean? If I'm a Polish consumer and I buy something from a Portuguese web shop, do I do a wire transfer, 100 euros, put it there, and if I never get the merchandise, good luck. Do I go to court in Lisbon? Do I call my bank? What do I do? If I do a wire transfer, the money's gone, right? I'm nothing against the Polish or the Portuguese, but you get the picture. If I use my card, I call up my French bank, my German bank, and I say, I never received it. So the point is, while moving money is the essence, and technology will continue to evolve and will get better and so on and so forth, I think there's that extra layer that you shouldn't ignore.
The insurance and the added value services that card schemes give.
And Michel, you raised a really good point about maybe the battle of payments, regarding the fact that in 28, the CEO of Visa talked about it. So do you think that in the future we will have a binary system with crypto and traditional players? Or do you think that maybe crypto will replace, I don't know, maybe Mastercard, or Mastercard will have another role?
Of course not. It's like when you're saying, Bill Gates said this, he said, I invented PC. And now banks will die. Well, then he recognized that banking is essential, banks are not. That was his idea. So he thought that the PC will kill the banks. It ended up by banks adopting PCs, computers. Same thing. As you can see, Mastercard, Visa are adopting crypto. They're starting to adopt it. And it should be this way. It should be Visa and Mastercard card scheme first before banks, because banks rely on them. If they don't do it, banks will never do it. A bank cannot do it alone. It needs a channel, needs a railway. Why do Visa and Mastercard exist? They are the intermediary between those banks. Banks do not contact each other. They don't have a contact book and call everybody. They need an intermediary. Okay, the blockchain is an intermediary. Still above the blockchain and even above Bitcoin, they have a role. They have a role to add insurance, for example. They have a role to be a bridge between those two worlds. And my view on this is the same as the view of Antonopoulos. They will live together. There will be from one side, for example, Bitcoin and maybe other cryptocurrencies. I'm not talking about shitcoins. I'm talking about other cryptocurrencies that can be used for payments. They can live alongside with central bank digital currencies. Central bank CBDCs, they will be here. They will take some time, but they will be here. It's in the big industry of a central bank to put them. So they will put them, and people will use them. We'll use them because we will collect taxes maybe with them. We'll use them because we will be forced maybe to use them. And at the end of the day, we will need some intermediary to do a bridging. So they have the intelligence to do it. Olkypay is doing now a big job to helping companies, individuals, merchants to bridge this gap. And it's still not enough. I mean, what Mastercard is doing, what he said, well, not Bitcoin for the moment, correct?
Not on our network, no.
See, so they still have a path to walk in, but they will see eventually that Bitcoin Lightning technologies are the best. Actually, CBDC is learning from Bitcoin. So,
but that's why I think that we believe that we should see the question. I mean, it's a bit misleading to think about integration in terms of market size or being a giant or not. If you look at the PSP market, you see it's highly innovating and meantime fragmented. There is a dozen players all around the world. And during the 2 past decades, the most innovative payment products did not come from giant. They came from fintechs and small startups. In the meantime, the payment service provider which integrate crypto, they all partners with crypto-native players. For instance, MoneyGram has partnered with Stellar, Lobster, and Circle. Revolut with MetaMask and Ledger.
BlackRock with Coinbase.
Yes, Stripe Connect accept a list of layer 1 and layer 2 cryptocurrencies. So I think that for the coming 10 years, 15 years, there will be more competition, cooperation than direct competition between native players from the crypto and payment industry. And maybe, I don't know what you think about that, or Christian, maybe a sort of merge between the two industries. And I'm truly convinced that some native players will become big payment players.
It happened before. I will immediately give you the mic, but just a small comment. It happened before when neobanks were born. For example, Boursorama was bought by Société Générale. So big banks will say, okay, let them play. Okay, now let's merge. And at the evolution of any industry, you have a gold rush era where startups are popping up and investment is flowing, and you reach a point where you do structuring of the industry. So there will be merger and many will fail. So yeah, we are starting, because of the regulation and the heavyweight regulation coming, the industry has to restructure itself many times through acquisitions and mergers.
And there's 2 thoughts. I agree, it's not going to be binary either or, because I like the example of fintech, like Revolut number 26. Did they kill all the banks? Obviously not. But I tell you, if Revolut and 26 were not around, the mobile banking offering of Deutsche Bank, Commerzbank, and Société Générale would be here. Right? Because they raised the bar, and nothing against these banks, right? But they raised the bar for everyone. Like, if Tesla wasn't around, BMW would sell V8s and combustion engine, right? So I believe that the innovation will drive this. And the second thought I wanted to share is, I believe that, I know that a lot of people don't care how they pay, right? It needs to work. It's a low involvement, low thrills thing. And if you want the underlying technology like blockchain, like a lot of people here care about, but a lot of people out there don't care about, if you want this to go mainstream and scale, you need people like PayPal, like Forge, Société Générale, like BlackRock, like Mastercard to adopt this. And I don't think it's like taking over something beautiful or something and then spoiling it with the corporate ethos. I don't think that's how one should look at it. I think both parts will benefit a lot. And last point, and then I hand over. I think regulation in crypto is the best thing that everybody can hope for in the industry. Because if you want a balanced and nuanced regulation, I'm not commenting, but if you want to sit with the grown-ups at the grown-up table, and if you want to be entrusted that people put their lifetime savings with you, right? You need that regulation, right? And I'm not debating the nuances of the regulation, I leave that to Michel, but I think the fact, it means like people take you serious, you need to have your shit in order, and I think it's a good thing to mature, because if you're not regulated, you won't mature in the mainstream.
Sure. But regulation is essential. Actually, I didn't say it, I also work on the compliance for exchanges, so I do business because regulation exists. Not only in crypto, I do this in crypto exchanges, but also for the big banks. Banks pay about 30% of their turnover just on compliance stuff. That's where our money goes. When you put your money in the bank, part of it, the turnover, goes just to be compliant. So it's un mal pour un bien. It's an essential thing, you cannot escape it. The question is, do you regulate the same way the banks and the small crypto industry? Well, you can say they have the same categories of risk, but they do not have the same value of the risk. So unfortunately, the regulation is essential, but putting the same size regulation for everybody is not intelligent enough.
So we come back to the question of risk matrix about crypto, knowing scenario of EML, of fraud. So it means taking the risk to adopt crypto, largely to observe the market, to cooperate with FIU or any with, of course, the card schemes, to be able to have the full map, and after that to make some arbitrage.
And so if crypto is the future of the payment industry, how you see this future, for example, for Mastercard, how you see your role in maybe 10 or 15 years?
I think crypto or blockchain or programmable money will play a way more important role, a bigger role than today. I couldn't tell you, how exactly, but why I like my current job a lot is up until now, and Michel will relate, right? We had form factor innovation. You move from a Mac stripe to a chip, from a chip to NFC, from an NFC to mobile, but it was always fiat money sitting somewhere. And now we have multiple inroads for the digitization of the very concept of money, be it CBDC, the digital euro, be it stable coins, or be it Bitcoin and Ethereum. And I think all of these, let me call them money, will have different qualities and will be used in different instances. And the only thing I feel certain about is will be more relevant in 5 and 10 years today. If you put a gun to my chest and said, Christian, how much of your transaction will be sort of settled on a blockchain, I honestly don't know. But we are bullish enough to have a lot of people think and work on this.
On this, Michel, Karima, how you see, the future, the landscape? So you see multiple coins like CBDC, stable coins, crypto, Bitcoin, fiat.
The expression "crypto payments are the future of payments." It's my motto since 2010 on my LinkedIn page. So I'm happy that you use it exactly the same way, because that's what I also believe in. The reason is the following: today we have 580 million Bitcoin adopters in the world, or crypto adopters, if you want. By adopters, they are from different industries. Some of them are only for speculation, others for belief, others for, I don't know. It doesn't matter. What matters is the growth. The growth is huge per year. It's like, I don't remember exactly, it was like maybe 40% growth in 1 year between 2022, 2023, something like that. What does this mean? This also means that in payments, payment transaction using crypto, using Bitcoin actually, they have grown 600% in 1 year, at the same year. So you had more users, more crypto wallets, crypto holders, not wallets. We are not counting the wallets, we are counting the holders of the wallets. So 40% growth made a growth of 600% in Bitcoin payments and crypto payments, including stablecoins, okay? And I'm only talking about payments, not speculation, buying and selling. Why? Because there are a growth of the merchants accepting Bitcoin in the world, and crypto, stablecoins also, 174% growth of the number of merchants accepting. This is partly thanks to PayPal, Visa, Mastercard, and people like them, and Olkypay and banks. This is thanks to industrials, trusted ones, maybe big ones, large ones, who said, okay, people want this, merchants want this. Another statistic, 85% of merchants today want to accept crypto. Give me a solution. So there's a market for those who want to build something on this. There's a big market. 40% of crypto holders say it's a big priority to pay with their crypto. Okay, I know that crypto holders use it for as a reserve of value, but 40% of them say it's a very high priority to be able to pay with it. So not all of them are only wanting to hodl. And I will take just one more minute to stress this point. The payment industry, you cannot distinguish between a means of payment and a reserve of value. You don't want to say it? Okay. This is the biggest point I always repeat, and it always makes a debate. Where does the value of money come from? Intrinsic value of money came from something. But first, let's say gold, it came from, first was its attractiveness, its association with kings and gods. The attractiveness, the material physically was rare. The material physically was unchangeable. So it has some intrinsic characteristics. Now, when you define the money, you all now repeat the motto, it's a measure of unit of account, it's a reserve of value, and the means of payments. Well, they are not equal. Those three are not equal. They are not a definition, they are attributes, and one of them is the source of the two others. When you do a payment, you do a transaction in space. I pay something, you're giving example of Portugal and maybe Australia or something. So in space. When you do a reserve of value, you're doing a payment in time. You're transferring the value over time. But what makes them both happen? The means of exchange. So the means of exchange is the source of value of the reserve of value and the stability of the unit of account. This is not only philosophical, this is also proved mathematically. That's one of the coming papers that I'm still working on since many years, but hopefully I will be able to comment next year. So the point I'm saying is the following. If Bitcoin hodlers only hodl all the time, Nassim Taleb will be right. He made a paper, Bitcoin value will go to zero. It will go to zero if everybody hodls, just evident. If nobody does anything with it besides speculation. So at some point, something will give value to Bitcoin. And today's value is its future value. It's an estimation of if it's used, I don't know where, we don't care where. If it's used, if it's useful, it will have this value today. And the only place it should be used initially is as a means of payment. Now layer 2 will give DeFi, will give Turing complete stuff, but the initial value is payment. So that's why I still insist that crypto payments are the future of payments and of Bitcoin.
Thank you very much. Karima?
Yeah, really interesting, and to fully agree with your analysis. It's highly difficult to predict the future. I can only give you our vision for ourselves, our future business model. As payment institution, we do the both. I mean, we issue payment instrument, which is a mean of payment, mean of exchange, and behind that, there is reserve of assets, because we have the duty to transfer from point A to point B assets, I mean, fiat. So we credit and we debit accounts. So for us, adoption of crypto and our business model will be to do what we do already today. And of course, it's for us question of tokenization. Sorry to sum up like that, but it's just tokenizing what we already do. But the question is there a place for multiple coins, multiple cryptocurrencies? I think yes, at least for a certain period of time, because the use cases are quite different. Using Bitcoin, for instance, for crypto asset manager, for buying share of or units of crypto funds, it does not function. You need a settlement coin, which is permission, which is KYCs, because the products are fully regulated. They need to comply with MiFID II, with AML-CFT. So Bitcoin does not function, USDC does not function. So there are places for players like us for being partner and for issuing settlement coins. So yeah, I think there will be duality lot of different use cases.
Okay, okay. So at the end, it's more a way of saying that we will be free to use different means of payments in the future, and yeah, maybe with Mastercard or other big players. So, I mean, thank you very much. We have 10 minutes for questions. If you want, raise your hand. If you want to ask the question in French, I will translate it. But if it's in English, it's
thank you.
Perfect.
I very like the intervention. I have a question for Michel. I agree that Bitcoin is the future of payment, and I was thinking about the CBDC of what about creating a CBDC into the layer 2 of Bitcoin, like a stable coin or something like that, into the Bitcoin blockchain, which is working since 2008, instead of trying to making something new that maybe not working?
The good news is that Banque de France is one of the only central banks that is working on public and private blockchains to create a CBDC, wholesale CBDC. The farthest point that they have reached is Ethereum public. And it was one of the first central banks to also do a production solution on Ethereum public chain. It was a small use case, but at least they did it. So they are far away from talking about Bitcoin today. I have tried. It's only HTLC, we took it and we use it, but Bitcoin itself is not mature enough today in layer 2 to build a CBDC. In the future, I believe it will be. This is my personal opinion on this. So I agree on this point. But today, they are in competition with Banca d'Italia and the Bundesbank on the solution, and the other solution do not use blockchain. So if you want to be against CBDCs, you can, but the only central bank that is trying to approach blockchain in a good way, not enough for everybody, is the Banque de France. So that's why I also accepted to support and work on the CBDC wholesale on blockchain.
Okay, thank you.
Thank you. Yeah, over there, over there.
Hello?
Oh, okay, perfect.
I'd like to address the elephant in the room here. It's USDC. Well, it's just my opinion, maybe I'm wrong, but when we're talking about USDC, I see CBDC already. Why? Yeah, I see Karima shaking yes, yes, definitely, yeah. So I think US is quite smart right here, because they leave the private sector and they see what's stick on the wall, and they say, okay, so we're going to use this. So now you're going to comply, and we're going to use your technology. Why in Europe we don't do that? We want everything to be done by the public sector. We spend like a huge amount of money for it, and nobody wants it. So it's like, well, okay, so in the future, why we don't do like US? We have like CBDC, like USDC, and we can also have like a Bitcoin saving account. I don't know.
Yep. No, it's a really good question. I think that you said it all. The US rely on, I mean, most of the time on the private sector, and they have Coinbase, Circle. But I mean, you can answer. What do you think about it? It's a really good question.
Maybe the way I see the question is, the answer for me is it's around, you know, political philosophy of regulator or policymakers. They feel more secure if, you know, there is even private-public partnerships, and on this key aspect of money, sovereignty, etc. That's for them. That's really difficult to consider any money that's, you know, used very globally by people, by everyone here, and not managed by public authorities.
One thought, and the ECB or the European Parliament don't need me to hold their flag high, but I think one thing one needs to acknowledge is the fact that you actually regulate stable coins under MiCA before you have your own product out there. A retail CBDC actually is a good thing, because you kind of, in my perspective, you tell if you going forward use a regulated stable coin from the private sector, you're guaranteed that you get your money back at the end of the day. So I would say in that sense, even though ECB and the public sector say we want our own solution out there, because for monetary policy, for global strategic regions, we still allow for a regulatory framework that allows digital private money. So I would almost say, while the Europeans, you know, they would invest money in this for good reasons or not so good reasons, but I think you will have that choice to go for private sector, digital money, and for digital euro.
Thank you.
Yeah. Ouais. Yeah, au fond, on prendra au fond après.
Thanks for the roundtable. I have a question for Christian. One thing you mentioned about the cost of credit card payments was that it's not only about moving the value, but it's mostly about doing AML, protecting against credit card fraud. I'd like your opinion. One thing I found really nice when paying online, for example, with Bitcoin or Lightning, is that it's the difference between credit cards, where you have to, for every payment, to expose your whole credit card, which means that people can steal a potentially unbounded amount of money, whereas when you pay with Bitcoin or Lightning, you only pay for this specific amount without revealing anything. So it feels like it's much more efficient to protect against the credit card fraud risk in a way. How much of it do you think makes it more efficient or interesting for the complexity of a system like Mastercard?
I fully agree, and we're moving away, without being too technical, we're moving away from your clear card number being stored online or being basically submitted to the merchant. It's a bit like Apple Pay. So when you use Apple Pay, basically they create a digital twin or an alias, not a twin, and that put that on your iPhone. And then even if I wrote down that card number, it wouldn't work anywhere else, because that card number knows it only works in conjunction with your Apple device and the device ID and so on and so forth. And that's why we also move away from card numbers towards tokenized card numbers. But I get your point, and it's definitely something that we push forward.
A quick comment on this one. It's related to two norms in the card industry. PCI DSS, Payment Card Industry Data Security Standard, that puts all the safety measures at merchants and at banks. You see, it's an additional cost. It's built in Bitcoin, but for the banking and card, it's an additional cost. In addition to that, he's talking about EMV tokenization, Apple Pay tokenization of the card. It's also an additional cost, but it's a very secure system. It's almost as good as a vicinity payment where you use the physical card itself. But it is not at the same standard of Bitcoin. It's still very, very much below Bitcoin and Bitcoin Lightning, and you're right on this question.
Yeah, last question, and after I'm sure that you'll be glad to answer to the other questions outside. Ouais, au fond, mais alors, on ne voit pas dans l'obscurité. Yeah.
Thank you guys for these words, and I wanted to ask a question to Michel 30 minutes ago, but I think they did not see me. I cannot see you. This idea is from Matthew Quaddert from Bitcoin University. Maybe some of you guys know. So let's try it in English. Imagine that JP Morgan or Tether issues a digital currency to avoid regulation, so they can do pretty much like whatever they want, how, like, yeah, it will be like a dream for the people behind the digital currencies. I hope you get the point.
Maybe I didn't get the point completely, but JP Morgan already has its own JP Morgan coin that is processing $1 billion per day, so it's a big success initially. But the question goes to a utopic maybe area or a theoretic area that I do not grasp completely. You're talking about anti-censorship. There's tomorrow morning at 9 a.m. A keynote that I will give on how much Bitcoin can resist censorship, if that was the target of the question. Maybe I didn't get it.
Because Matthew is called conspirationist. He thinks that if
Bitcoin is made by JP Morgan? That's what's behind the question?
no, but indeed, if a central bank does this, maybe they will have less power. I don't know, because of regulation again.
Look, the market is intelligent enough. Nobody can do something bigger than the market itself. Even central banks are market actors. Even countries are market actors. So they can decide, they can be a dictator, they can be a heavy regulation. The market will change the regulation if needed, if there's something wrong there.
Okay, I see. Thank you.
Okay.
Thank you.
So the very last one, you go. Short, please.
Yes, thank you. I have something I think I don't understand technologically. Like you say that Mastercard is like an authorization when you pay, and with Lightning Network is validate the transaction in a millisecond. I think you say something like that. But I understand that the vision of Satoshi Nakamoto was to create an infrastructure indexed on the power of energy with the proof of work, we will be decentralized and secure, and to be independent. And I have the feeling that Lightning Network is a layer 2, is not Bitcoin. And I have the feeling that you think that you can trust another technology as Bitcoin, and you say that the transaction is validated in milliseconds, but Bitcoin have 1 block per 10 minutes, and I don't understand how it's possible, because you don't have to trust, you have to verify on a block.
Yeah, I precise this, that the finality of the transaction using Bitcoin Lightning is done on the Bitcoin Lightning Network layer 2. So we can say the transaction is final. Now, there is a settlement that can be optional, that can be delayed, that can take months, nobody cares. When it takes place, it does not reverse your transaction. So, yes, Bitcoin was designed to be a means of payment. The first sentence of the white paper used the word payment. He said, I created a payment system that is cash-like, that do not need an intermediary. So he used the word payment. It was his intention to build a payment system. The limit of the exercise was to do a near real-time payment. 10 minutes was near instant. It was like science fiction for central banks, 10 minutes at that date. So we needed Bitcoin Lightning to do small transaction. This is an analogy between retail payment and wholesale payments. So the big amounts can take 10 minutes, nobody cares, 10 minutes is fine. But if you want to pay here your cup of beer or your t-shirt, it's immediate and it's final.
Yep. Thank you very much. Big round of applause for them.
Merci.
And, see you after. Joe, I think it's the end. Okay, perfect. So let's grab a beer, continue the discussion. Thank you very much.